This Committee of Finance, Diversity, Equity, and Inclusion is called to order. We'll reconvene with the Division of Purchases and Supplies.
Page 157, Division of Purchases and Supplies, Commissioner Tiffany White Johnson. Page 158, Salaries and Wages, 2024 unaudited, $460,372. 2025 budgeted, $701,949. Page 159, Total Expenditures, 2024 unaudited, $645,191. 2025 budgeted, $1,101,630. Number of employees, December of 2024, 7. Budgeted 2025, 10. Mr. Chairman.
Thank you. Director, anything?
Yeah, so through the chair of the committee, again, trying to head off some questions I know you're going to ask. If you look on page 158, and about most of the way down the page, you'll see a new charge for materials. Well, actually, that's the total. If you go to software, computer software, which is about 2/3 of the way down the page, you'll see that there was zero charge. And then for 2025, we're budgeting $50,000. That is for the OpenGov system for RFPs. So this is a new system we can use to, actually process the RFP. So again, looking to modernize. The rest of the charges are really due to staff changes. So we have a net positive two in terms of adding some positions, but we did eliminate a project director that we didn't feel that we needed. And this is again on page 159 in the staffing. So the financial systems coordinator will be used to run the vendor self-service system, and a second position, which is one of the buyers. There's 2 buyers that we're hiring. One will be an assistant to assist that person in managing the vendor self-service. And then the second one will focus on public improvement contracts and making sure we're meeting our specifications. So in other words, processing them properly.
Okay, thank you. Any questions? Councilman Charles Life.
Thank you. This has been, I think, a division that obviously has a critical role, but it's one that I recall has always been pretty significantly under budget as a relative percentage. It's not a large division as far as expenditures go, but we even see last year the unaudited was 645, and I believe we had budgeted around this comparable to what we're budgeting this year. So it seems, I don't know if there's an update between the December employment numbers and the current employment numbers, but we on the council side hear from, like, we hear a lot of frustration that things get slowed down, and my question is, what is our plan to actually expend this budget? I think this is an area where I don't want to cut just because it's not being spent, but we're seeing year over year that we're not approaching budget. So is there a plan for how to support this division to ensure that we are expending the budget and procuring things in a timely manner?
Yeah, so through the chair to the councilman, this is one of those divisions, and I know Commissioner Johnson has done a great job of revamping the way we do things. So we are, again, looking to spend in modernizing, so I think that's an important investment, so we've added some money there. And then the additional, positions that we have will also ease some of that pressure on not meeting the budget. And we, again, are hiring those to improve the process. And, we've heard that, we've gotten feedback from other divisions about how we can be procuring things more efficiently. And again, Commissioner Johnson has done a great job of going to seminars and putting information online to help the other divisions. So we're confident that the volume that we move through will increase, and that'll also get us closer to budget as we get more efficient with these systems.
Sure. Councilman Mike Polinsky.
Thank you. Thank you, Mr. Chairman, my honorable colleagues. To the director, do we have any requirement in place where Cleveland-based companies have are given a leg up as it pertains to supplying services, supplies, et cetera?
Yeah, so through the chair to the councilman, that could be incorporated in the scoring when we do an RFP. There could be assigned, a value to the total score that we could
But
use.
is that the case? That's what I'm trying to find out. Is that the case?
It's not standardized. I don't think so, no. Through the chair to the councilman, it's not a standard practice. It's kind of a case-by-case thing.
Okay. I think, Mr. Chairman, honorable colleagues, I'm a firm believer you got to take care of home first. So I would urge us collectively, both the council and the administration, to look at this. If we need to pass an ordinance to that effect, because I don't believe it would be governed by charter, at least I don't think it would be, we need to look at Cleveland first. I'm a firm believer. We've got businesses all over the city who are struggling, and if we're buying supplies and goods and services from outside of Cleveland, it should be Cleveland first, and second Cuyahoga County. And then if you can't find it within Cleveland or Cuyahoga County, and I can understand it going out, but our priority should be buying goods and services from Cleveland companies. So, Mr. Chairman, I would respectfully ask through the finance director that your shop take a look at that. I'm willing to sit down with whoever to work. I said if we have to work on a piece of legislation, I'm more than willing to do that. But I'm more of the opinion now than ever before that we have got to look out for our own best interest, because I find no one else is doing it, and I don't even think Cuyahoga County is looking out for our own best interest at times, okay? So I'll leave it at that. I'm willing to sit down and discuss that about a component for Cleveland-based services and companies and supplies. Thank you, Mr. Chairman.
Thank you. Councilman Joe Jones.
Thank you, Mr. Chairman. I'm going to leave off on my colleague, Scott, and just, touch that a little bit. I would suggest on the theme, taking care of Cleveland first is important, and it should be built into the way we do business. So I guess when we look here on page 157, Mr. Chairman, to our CFO, we see that competitive bids over 50,000 was 252. We see that competitive bid processed under 50,000 was 2,637. And then you have the rest of your various standards that you have here for the metrics. But on those 2 points, Mr. Chairman, to the director, do we know what percentage is Cleveland and what side is outside the city of Cleveland?
Through the chair to the councilman, I don't have that answer for you right now. I will say when we're evaluating RFPs, 2 of the heaviest weights are on competency and cost. So we're looking to get the best for the lowest cost. And again, we do have some aspect usually of location in the scoring system, but we also want to make sure that we're not hamstringing ourselves and getting a firm, limiting ourselves to firms that aren't necessarily the best and the lowest cost.
I see. And so is there somewhere I can go and understand who bid it for what? Or do you have this broken down to who received the bids? And then that's one part of it, and then I'll wait and see. I'll ask the next question.
Yeah, so through the chair to the councilman, I don't have that in the budget book. We can get with the commissioner of purchasing and see what you can produce for that. I will say, just to add, we are working with IT when they get their intranet up and running to create a site for procurement, which will have more information. Right now, we have a site that kind of rolls all our policies and procedures, and it's not as well known as we would like. So we think once the intranet's up, we'll have more of that information readily available for everyone.
Do we know, Mr. Chairman, to our CFO, the ethnic participation in these numbers could show us, how many minorities are participating, black men, black women, and then others?
Through the chair to the councilman, again, don't have those numbers in the budget book, but we can get those for you. I know when we're evaluating proposals, again, women and minority-owned and veteran-owned firms are something that we look at.
And what's important, Mr. Chairman, at least in my mind, on the whole proposition of what Mike Polensek is saying, is to make sure that we take care of Clevelanders first, that we take care of our citizens and we take care of our businesses, and we should have some kind of fundamental goal where our city is working hand with our businesses as well as our constituents and moving this ball down the road and having competitive bidding processes. So having this information, Mr. Chairman, you say I can go online and be able to get this information and break this down, or this is something that you will be able to, so I guess let me make a request for information. So Mr. Chairman, I request that to the director that we, if you can make available to us, what these numbers stand for in terms of who's bidding it, based upon either they live in the city of Cleveland or live on the outside of the city of Cleveland, and then who that is, right? So can that be made available, Mr. Chairman, to our CFO? I know it may take some time, but you may have it already ready to print.
Yeah, through the chair to the councilman, we'll look at what report we can run and see what information we can pull, and we'll get that back to you.
And then also, does it give a description too of what they actually bid it on, and what you're actually asking for from these bid processes? And do they change each year, or are they pretty much boilerplate, Mr. Chairman, to our CFO?
So through the chair to the councilman, in Cleveland, since I've started working here, I haven't actually graded an RFP, so I haven't gone through the process myself. Yeah, I mean, we're always looking to better the process and see what we can do.
Thank you, Mr. Chairman. No further questions.
Thank you. Seeing no further questions, we'll move on to Bureau of Internal Audit.
Page 160, Bureau of Internal Audit, Manager Natasha Brandt. Page 161, Salaries and Wages, 2024 unaudited, $453,716. 2025 budgeted, $495,761. Page 162, Total Expenditures, 2024 unaudited, $751,817. 2025 budgeted, $1,312,304. Number of employees December of 2024, 6. Budgeted 2025, 7. Mr. Chairman.
Thank you. Director?
So through the chair to the council, again, in the spirit of trying to head off questions, if you look at the part-time row on page 161, you'll see a 0 for last year and then about $16,000. That is for some interns that we expect to get to help out with the audits. Again, something that may raise some eyebrows on professional services, you have zeros across, and then you have 175,000 in the 2025 budget column. That is for, so every year we budget for a potentially large audit. So we may get hit with the audit request that we don't expect from the state or something like that will have some extra costs. We don't always spend those funds, but we want to make sure that they're budgeted and readily available. And then also want to call your attention to the state and I don't know what that stands for. State and examinations, I guess. State audit row, which is jumping from 121 to 430, and the contractual jumping from 121 to 606,000. My understanding, and I can let Mr. Gentile go over the mechanics, is that we budget for these audits in the internal audit budget, and then they move, like for instance, if we have to do an audit for taxation or the airport, they end up moving off of the internal audit budget and onto that group. But Mr. Gentile can explain.
Yeah, to the chair, to expand on what the director said. Yes, this is the external audit done by the state of Ohio. Previously, we had a private auditor. The whole audit is budgeted here, but we have to, as we figure out how many hours the auditor spent at utilities, it's then reversed off of here and then charged the 3 utilities. It's charged to airports. It's charged to some of the federal programs, but this is where we budget for the contract. And then we share those costs with the other entities at the city that has to get audited by the state auditor. So we have to wait until we get the hours expended by the auditors in each of those areas to actually allocate it back. So this will always come in less, but we need to be able to pay the auditors out of this budget and then allocate the funds back as we get the numbers from the auditors of where to charge it back to.
Yeah, and the last thing I'll point out through the chair to the committee is on personnel. So we are actually decreasing our personnel by one. So I had talked to Commissioner Brandt about what she wanted to do with her division when I first got here. And we're budgeting for one less position so that we can increase the pay range on the other positions. There's been challenges with maintaining talent, especially at the senior level. So that was the request. So instead of adding positions, we're decreasing, and you'll see that the full-time employees are essentially, the actual amount on page 161 is essentially stable.
Okay, thank you. Councilman Polisic.
Thank you. Thank you. Thank you, Mr. Chairman, honorable colleagues. Just on that point to the director, I mean, this is the challenge that we're confronted with here. When we're in a competitive situation with the private sector, we'd like to increase many of the salary bands, but the reality is that you don't have the pot of gold at the end of the rainbow to cover a lot of this stuff. So that's part of our challenge as we go forward. That's why I think it's incumbent upon you and your team to really pinpoint those areas within the budget that are really where we're deficient, significantly deficient in salaries, and we can't attract qualified people, or we're losing qualified people. And that should be something that we look upon in every department and division. So I'll leave it at that. My question is this pertains to internal audit. So internal audit looks at every general fund department and division, correct?
Yeah, to the chair, the councilperson, they actually involved are in citywide, so they look at general fund, but if there's something at a enterprise fund, they'll also.
They will as well.
They will, yes.
Okay, so do they ever look at accounts receivable?
Through the chair, over the years, they have looked at some accounts receivable. They've done some work on those.
Okay. Did they ever look at EMS billing?
Through the chair, the councilperson, I can't remember. I do not think that they did.
Yeah, well, I don't think they didn't, because when you look at the money that was owed us in EMS billing, and see, this is what I want to get to the point. You're the new director here, a finance director. EMS billing was a disaster, and a disaster for years. And why something as critical as internal audit and other internal operations didn't flag and say, wait a minute, we got a problem here. We got a problem here. And it was never addressed, and then the administration's posture then was to job it out and to have city employees, long-term city employees, have to be displaced. But I'm hoping, as we go forward, that you're going to look at all areas where there is outstanding accounts receivable. And why is that the case? So I'm going to leave it at that point. You're reducing your budget by one. I hope you're successful in what you're attempting to achieve here. Time will tell. But again, where we have outstanding accounts receivable, Mr. Chairman, there should have been flags going up a long time ago, and they didn't. So I sometimes question, are we really doing the oversight we need to do? I'll leave it at that. Thank you.
Thank you. And we can bring them back in for oversight when we need to,
Yes.
get some more in-depth conversation along that, okay? Sure. All right, anything else?
I was just going to say, through the chair to the councilman, in my brief time with Commissioner Brandt, I've found that she's very proactive about finding issues and
Okay.
looking into them. And we will definitely keep that on our radar, looking
you.
into accounts receivable.
Thank you.
All right, thank you. And Ms. Brand is another one of those employees that are very valuable. A lot of people don't know about, but does a lot of great things for the city, so appreciate it. Two people I learned about finance from is your assistant finance director, or whatever her title is, Ms. Gallagher, and Ms. Brandt. So two great people.
Yeah. Through the chair to the council, if I can embellish, all 11 of my commissioners are incredible.
Yeah,
So.
exactly. All right, no other questions. We'll move on from Bureau of Internal Audit. We'll move to Division of Taxation.
Page 412, CCA Income Tax Administration. Administrator Kevin L. Preslin. Page 413, salaries and wages, 2024 unaudited, $4,822,214. 2025 budgeted, $6,182,828. Page 414, total expenditures, 2024 unaudited, $11,023,704. 2025 budgeted, $14,908,409. And page 416, number of employees December of 2024, 65. Budgeted 2025, 112. Mr. Chairman.
Thank you. This is pretty straightforward, and I know we have Mr. Preslin in the audience. Did he want to, if he could join us if he would like to? Administrator Preslin, great guy. Good to see you.
Likewise, good to see you too.
All right, just a couple of things. Income tax look like is jumping significantly, or you anticipate that it's jumping, it's going to jump significantly. Why do we anticipate that increase? Page 415.
To the chair, that is not the income tax that we collect on a regular basis. That is basically the city and other municipalities' share of costs for our division. So if you look at previous years and even the current year, that breakout, the larger number being the city of Cleveland's portion and the smaller number being our other municipalities. So that directly ties to us just having a increase in budget due to primarily headcount and reminding the council that we are an agency fund. So our headcount is primarily for the ability to adapt if we were to gain new members. We're constantly looking to hire as well, just in general, and there's no impact on the general fund in terms of being able to transfer those dollars or positions to other departments. Since we are an agency fund, it ultimately gets charged back to the city and the other cities at the end of the year.
And just out of curiosity, how many cities do we have on our network? Because we lost Barberton, didn't we?
Correct. We have approximately 36 full members across the state of Ohio, in addition to a couple dozen that we will occasionally do special projects for with the data that we get from the IRS.
Okay,
Wait a minute.
thank you.
So that's 36 municipalities?
Yeah, I believe it's 37, including Cleveland.
37. Okay.
Okay,
You
all
have
right.
a question.
Thank you. Councilman Brian Casey, then Councilman Mike Polensek.
Thank you, Mr. Chairman. Mr. Chairman, to the Director, Commissioner,
Income tax administrator.
Administrator. When are people's income tax due?
The filing deadline is April 15th. The payment deadline, the answer depends in the sense that most people have their money withheld by their employer. That's remitted to us monthly, bi-monthly, quarterly. But there's also a rule in place that by the end of January, you have to have 100% of your previous year's balance or 90% of the current balance to us. Otherwise, you could be charged penalty and interest.
Right. And then, Mr. Chairman, to the Administrator, when do you mail those bills out to our residents?
We have a rolling every month, so it really depends on when the return is filed and processed, so that we either know about a penalty for a late filing or that you owe us additional money. So there's usually a month or so delay in terms of processing all that, and then we have a cadence where essentially every other month a bill will go out to that account, so that it allows time to make payment before another bill comes in.
So, Mr. Chairman, to the Administrator, if somebody doesn't get their taxes filed until February 15th, and by the time they get their return or whatever, when do they start accruing a late charge? Because you say that it's due at the end of January, and I know we've had this discussion before, right?
Yeah.
Because we've capped the penalty, correct?
Correct. So there's the penalties for late filing, which is capped at $25 total. And
Right,
then
and
there's-
Mr. Chairman, to the Administrator, when you say late filing, do you mean after the April 15th deadline?
Correct.
Okay, but I'm talking about individuals who do not have it paid by the end of January, like you said, it has to be paid by the end of January, but they don't do their taxes until April 15th or February or March or something like that. So because the deadline for doing your taxes is April 15th, but the deadline for the city is January, the end of January, people are accumulating penalties or fines because they don't have it paid by the end of January, even though they had until April 15th to get their federal do you know what I'm saying?
Yeah,
You
no.
see the problem
Yeah.
that we're having? And I get calls about this every year, right? Somebody says they get a letter, they didn't pay their taxes because they didn't file, because their tax guy they didn't know what they owed or what have you. They're just going off an estimate that we may send out. How do we correct that where our deadline isn't the end of January, but it's moved up to whatever the filing deadline is for tax day? You know what I mean?
That would be at the General Assembly level, because we're following state law under Ohio Revised Code 718, where any penalty and interest that we charge to a taxpayer is directly from that Ohio Revised Code that goes to our Chapter 192.
So we're setting the end of January, Mr. Chairman, to the administrator, as our cutoff date per state code, even though the filing deadline's not till April.
Correct. In the instances that you're referring to, when we get a return and/or payments, we review the account and audit it to make sure if they meet the threshold that I spoke about earlier, there is no penalty and interest. Otherwise, our system will generate penalty and interest in our system, and then every month when we're generating bills, it'll accumulate that 1 month of penalty and interest, and it will go on, to subsequent bills.
And then, Mr. Chairman, to the administrator, how much is the penalty?
In that case, it's a percentage. I want to say it's up to 15% of the tax owed for the late payment. And that's in addition to a late file penalty, which may or may not apply.
And all of this is set because the General Assembly says we have to have everything done by the end of January, even though the filing deadline for your taxes isn't until April, correct?
Correct. And my understanding is that falls in line similarly with states and IRS in terms of penalties and interest for those.
And then, Mr. Chairman, to the administrator, does all Cleveland residents get a letter saying, hey, look, you may or may not owe this or that before the end of January?
No, they wouldn't. Letters are generated primarily based on known liabilities. So if they filed a return, in that case, that would tell us that they made a payment after the deadline, and then that would generate potential penalty and interest after we process that.
And Mr. Chairman, you can see the issue that we have here. So maybe it's something that this body can have a conversation with the General Assembly. It just doesn't seem fair to me that somebody does their taxes on April 1st, but they're getting fines and penalties from the city because they may have owed $20 or whatever, right? Because they didn't know until they get their taxes completed. I mean, it just doesn't seem fair to anybody who's filing their taxes.
Through the chair of the councilman, I completely understand. And while this doesn't necessarily alleviate your concerns, one thing we do tell taxpayers is if you pay the amount that you owed last year, you're covered through withholdings or estimates. So long as you paid that.
As long as you're current on your
Because you're essentially estimating, because to your point, you don't know your total liability until you're preparing your taxes.
Right.
But if you pay whatever your previous year's liability was, and then make that payment by April 15th, you would not incur penalty and interest.
Okay.
It might be small businesses or people have large income swings where they get into trouble, in that regard.
Okay. All right, thank you.
Thank you, Councilman Palencia.
Thank you, Mr. Chairman, my honorable colleagues. To the administrator. Okay, we collect taxes for 36 municipalities, and then the city of Cleveland, so a total of 37.
Correct.
And we charge, what, per taxpayer? How do we charge a municipality?
Through the chair of the councilman, it's a two-part calculation where we look at the dollars that we collect and the number of transactions that we incur. A transaction might be processing a return, processing a payment, stuff like that. And then it's just an average of those two numbers. So,
And that's across the board?
correct.
Okay. So on the, on page, and I'm just going to ask, and you don't have to, I'll request through the finance director, on maintenance, under maintenance for, there's been a big uptick in computer hardware, and then a big uptick in computer software maintenance for both of those. You could get that back to us in writing as to why. I won't belabor the point here. But on your revenue side, on page 415, we see, the miscellaneous is what that you're collecting?
Through the chair to the councilman, that is how it's accounted for in terms of the income tax that essentially stays in our division to pay our budget. So the miscellaneous is the estimate for what the other municipalities, not Cleveland, will be charged, and then the income tax is the income tax share for the city of Cleveland's share of the charges for our budget every
So
year.
the 11 million is strictly for the city of Cleveland?
Correct.
Okay. Then on your following page, on 416, you dropped significantly in number of employees at the end of '24. What transpired? What happened?
Through the chair to the councilman, a couple things. One, we do have an older workforce, so retirements is part of it. And then two, I know it's been mentioned in other divisions, hiring can be a challenge for our positions. We have a mix of various positions, union, non-union, clerical, auditor, and just really since the pandemic, finding entry-level employees as well as retaining people with the specialized skills of tax or accounting.
Yeah.
It's been a challenge, but it's
Okay.
something we're consistent.
Okay. Are your employees civil service?
Through the chair of the councilman, they are all civil service or union.
Okay. I didn't know how that worked in light of the fact you collect for other municipalities. The last question I have, as pertains to in the city, people still working from home. How has that affected us?
Through the chair of the
I'm not
council.
talking city employees, because we talked about that yesterday. I'm talking the office buildings that are half empty, et cetera, et cetera. What, we've been able to calculate how that has affected us?
Through the chair of the councilman, it was definitely, and it was probably mentioned at this table, a big concern as the pandemic started.
Right.
Because it was, you don't know what you don't know, and you can't estimate something
Right.
like that. But as time has gone on, it has definitely it leveled out, I would say, probably about 2 years ago.
Okay.
And then we have seen a bit of a return to the office in terms of the withholdings, not necessarily pre-pandemic levels, but, it's to the point where it's noticeable, but it's not significant, I would say, in the sense of
Is
its
there any way
impact.
to put a dollar amount to it?
Through the chair to the councilman, that would be difficult because
Okay.
each employer is different, so we would have to kind of go each one and analyze.
And leave it. Does the employer have to report to you how many are working from home?
Through the chair of the councilman, they report income and tax numbers and withholding numbers.
Yes.
And number of employees that they have.
Yes.
But there is no, they have 1,000 people in the office and 100 people at home. They don't have to report that
So
type
we
of
don't,
information.
we really wouldn't know then.
Through the chair of councilman, no, it would be just looking at specific businesses and kind of analyzing the trends of their withholdings and
Thank
number
you.
of employees that they have.
Thank you, Mr. Chairman. Thank you.
Thank you. Seeing no other questions, we'll move on from Division of Taxation and move to Division of Risk Management.
Page 166, Division of Risk Management, Commissioner Eduardo Romero. Page 167, Salaries and Wages, 2024 unaudited, $393,790. 2025 budgeted, $520,213. Page 168, Total Expenditures, 2024 unaudited, $948,455. 2025 budgeted, 1,248,581. Number of employees, December of 2024, 3. Budgeted 2025, 6, Mr. Chairman.
Thank you. Director?
Yeah, through the chair to the committee, the only thing really worth pointing out, I think, is, the extra costs budgeted for full-time for 2025 is because of the vacancies that we've had. So we're budgeting for 6 total positions, and by the end of 2024, we had 3.
Okay.
Mr. Chairman?
Councilman Polinsky?
Is this still this section that is monitoring EMS accounts?
Yeah, through the chair of the councilman, yes.
So they are overseeing the outside contractor that you guys have brought in to secure accounts receivable?
Through the chair of the councilperson, yes. Risk management.
So that would be Mr. Romero.
Through the chair of the councilperson, yes.
Okay. Do we have anyone of the 6 that are listed, is there anyone specifically assigned to that?
To the chair, to the councilperson, yes, they have a manager that's managing the contract, the EMS contract. One of the additional headcounts that they're going to hire also will part-time assist the one person. So it'll be 1.5 people that'll be monitoring the company and the receivables.
Okay. So I'd like to know through the chair who that is, and then just to let you know that through the safety committee, we're gonna deep dive on that. Because you know what my concerns are. New director might not, but Mr. Gentile knows. I believe it was a toxic work environment down there. That's why employees left. And then you wound up by not hiring, then you had to go, we had a massive accounts receivable. And now you went out with a private contractor and we're trying to get caught up, but that's going to be a yeoman's task. So I'm just telling you right now, we're going to drill down on that.
Through the chair to the councilperson, the person that's full-time is April. She
Okay.
previously worked with EMS.
Yes.
Yes.
Okay. Just so you're aware, that was what took place down there was ridiculous, quite frankly. So I'm leaving it at that. Thank you.
All right, thank you. Seeing no other questions, we'll move on from Division of Risk Management and move to Printing and Reproduction.
Page 402, Printing and Reproduction, Commissioner Michael Hewitt. Page 403, Salaries and Wages, 2024 unaudited, $673,919. 2025 budgeted, $872,668. Page 404, total expenditures, 2024 unaudited, $2,364,846. 2025 budgeted, $2,873,303. Page 405, number of employees December of 2024, 11. Budgeted 2025, 12. Mr. Chairman.
Thank you.
Yeah, through the chair to the committee, the only thing I'll point out, because I know the question will come up on page 402, if you look at the top line on the metrics, average job turnaround time, in 2022, we had 3.6, and then we've been kind of steady at 6. The reason for that, I believe, is the actual size of the jobs has gotten bigger, so it takes them longer to print those.
Thank you. Do you outsource any printing?
I think we do it all in-house, right?
There's some overflow. To the chair, we do have some small overflow contracts in case there's something that printing can't do in a time requested.
Where is that budget line item located?
Is there another contractual?
Let me find it on here.
Would it be on the contractual
Other
professional
contractual,
service?
1,500.
I think that's where it is. Through the chair to the councilperson, yes, we said it was under contractual.
Okay. All right. The only thing that I will say, and I don't know how and I'm really serious about this, Director. Every year we had the same conversation that the council logo should be on every material that's going out to the public along with the city logo. I'm trying not to try to over legislate everything, but that is something that is very critical. We have this conversation every year, and for some reason, it starts out well and then it fades away. You know, I want to make sure we get a commitment because, to be honest with you, if we don't, this is part that all the council is really adamant that we start seeing the logo because this is a partnership. This is not just one side of the hall or the other side of the hall. This is a partnership. Okay? All right. Any questions regarding printing and reproduction? Any other questions regarding printing and reproduction? And seeing no other questions, we'll move on from printing and reproduction, storehouse and warehouse.
Page 406, storeroom and warehouse. Salaries and wages, 2024 unaudited, 57,868. 2025 budgeted, 55,644. Total expenditures, 2024 unaudited, 553,863. 2025 budgeted, 666,955. Page 407, number of employees, December 2024, 1. Budgeted 2025, 1. Mr. Chairman.
Thank you, Director.
So through the chair to committee, the only major increase that you'll see is on page 406 with postage, and that's just for supplies citywide, the cost going up.
Okay, thank you. Any questions, storeroom and warehouse? Seeing no questions, storeroom and warehouse, let's move on to Office of Budget and Management.
Page 169, Office of Budget and Management. Budget Administrator Nicole Gallagher. Page 170, Salaries and Wages, 2024 unaudited, 516,273. 2025 budgeted, 737,201. Total expenditures, 2024 unaudited, 697,290. 2025 budgeted, 1,019,757. Page 171, number of employees, December 2024, 6. Budgeted 2025, 9. Mr. Chairman.
Thank you, Director.
Through the chair to the committee, and I'll let Nicole chime in if she has anything to add, but only things really to point out are in staffing on page 171. So we have a grant manager. That person was actually in FRC, Financial Reporting and Control, in 2024, and have moved under budget. And then we are also adding a deputy budget administrator to this budget. One internal person that's done a stellar job, and then external person to bring us a fresh view and to, fully staff us, almost fully staff us. We'll have one vacancy, I think, actually we'll have a few, but getting close to being fully staffed in OBM.
Okay, thank you. Just real quick, why did you make that move from FRC to OBM?
So through the chair to the chair, this is part of the mayor's initiative, is to have a more focused groups centered around grants. And in his strategic plan, that's under OBM. We're in discussions about what that's going to look like. But moving that person under budget is consistent with the strategic plan.
So is that grant manager added yet, or are you still hiring that person?
To the chair, he's already employed. He was with FR&C, and we just moved him over to budget.
So will that person have responsibility for grants across the city? I mean, everything from public safety to health to community development, everything else.
So to the chair, we're still building out what that's going to actually look like. But we moved him over as a first step to building out, whatever that grant area is going to look like. And that's something that is high on my priority list. And he just is a wealth of knowledge when it comes to grants, knows everything about them, and has done a fantastic job. So, we're looking to see what we can do. It's a work in progress.
So here's what I'd like to do. At some point in time, we would like to have an operational oversight hearing regarding that when you do pull that together. The reason why, and Mr. Gentile could probably give you some background. I know that the health department several years ago had a lot of challenges getting grants back from the state of Ohio, and it cost us a lot of money down in the state, and we want to avoid those kind of things. But every department kind of has a bifurcated system of how they do grants. Like I know Ms. Hartsong has done grants for public safety for years. There you have the people in public health, and so I'm really interested in how you're going to put that patchwork together, and how we're going to aggressively go after more grants. Because, for example, a lot of people don't know this, but the NWCDC down in the waterfront, they wrote a lot of the grants for we get 170 million or something for the lakefront. So just to try to compile all these grants is going to be really cumbersome, and I like to see how all that lines up.
Yeah, so through the chair to the committee, so that's high on my priority list this year. There's a handful of things, and that's a big thing. I will say before I got here, Jim and the team started down the road of hiring a group called Amplifund, a software package that allows you to go out and look for grants. And I know economic developments, we're implementing software there as well to where we can issue grants on the other side. So, we take the grants very seriously, and we see the need, and we're moving on that.
So, Mr. Gentile?
Yeah, to the chair, we're in the process of implementing Amplifund, like the director said. That'll be a grant management system, something that we did not have before. So it'll help our citywide grant administrator, which is the one person. He does monitor all the grants, but this will, and like the director said, we look forward to trying to build that out at some point. But the system will really be good because it'll allow us to put all the deadlines within the system. The people that are responsible for doing, reporting, doing quarterly reports or whatever to the grantor will get an email notification. Our grant manager will, so it'll assist us in monitoring grants citywide more efficiently than we are right now.
Okay. Well, I'm looking forward to that because that's going to be very important. So please let us know. And is the money to purchase Amplify, you already purchased it?
To the chair, yes, that's been budgeted, and they're in the process right now. Literally, they're on site implementing that now. So that should be implemented probably within the next couple months. We should have it up and running.
So is there any training involved, and is there any other equipment? Is this a yearly fee, and do we have it embedded in this budget?
To the chair, yes, it is. There will be a yearly fee. We've covered the first full year, so it's not in this budget with the original purchase, which was last year. So we'll cover a whole year once we go live, and then we will pay an annual maintenance fee on Amplifund.
Okay, thank you. Thank you. Any other questions for OBM, Office of Budget Management? Councilwoman Jenny Spencer.
Thank you, Mr. Chair. I was going to ask about the grant manager as well, so I really appreciate your questions. And I wanted to add, I think the operational hearing is a great idea to not only understand the role of this individual, but the overall ecosystem of grants at the city, which is what I think everyone is driving towards, is having a cohesive system citywide to understand who's responsible and how do we improve this work. So those were great questions. I simply wanted to add thank you to Ms. Gallagher for her professionalism throughout these many budget hearings we've been through together. So
Thank you. And I concur. And you guys didn't know this, but she started out as a budget analyst. And I used to be in this little basement office and had no clue about municipal budgeting. And this young lady taught me a few tricks along with Ms. Dumas. And after the end of the day, now she's running the show with you guys now. So I'm proud to see that as well. So congratulations, doing a great job. All right, any other questions? Okay, we'll move on to the Division of Finance, Reporting and Control.
Page 163, Division of Financial Reporting and Control, City Controller Leslie Camargo. Page 164, Salaries and Wages, 2024 unaudited, $1,211,529. 2025 budgeted, $1,328,791. Page 165, total expenditures, 2024 unaudited, $1,728,445. 2025 budgeted, $1,861,625. Number of employees December 2024, 16. budgeted 2025-21. Mr. Chairman.
Thank you, Director.
Through the chair to the committee, not a whole lot to point out here. This budget's pretty much, for the most part, flat. Just that we do have some vacancies that we've been trying to fill, and that's been a challenge. But other than that, no other comments.
Thank you. And Mr. Gentile brought back his right-hand person.
Yes.
Good. Tell Ms. Camargo welcome back. I was wondering where she disappeared to.
Back.
Thank you. Any questions for finance, reporting, and control? And for the listening audience, once you work down in City Hall, you just see people over the years and get to know them. So, yeah. Okay.
If I could, through the chair to the
Please.
committee, just kind of, pump her up a little bit. And we've had 39, I think, straight years of winning the GFOA report for financial reporting excellence, and she's a big part of that.
She has been here and knows this job well, and she learned from the best, so she gets it. All right. Okay. We'll move on from FRC, and we'll move to Payroll Reserve Fund.
Page 309, Payroll Reserve Fund. Total expenditures, 2024 unaudited, 17 million. 2025 budgeted, 0. Mr. Chairman.
Director.
Yeah, so through the chair to the committee, this is for the 27th payroll we get periodically. That's why you see
Question you
17
have.
million in 2024.
That's the question you had. Didn't you have a question about
Open any questions you guys have.
Okay. Councilman Casey, and then Councilman Brian Casey, Councilwoman Jenny Spencer.
Mr. Chairman, to the director, don't we have the 27th payroll? How often?
Through the chair, I believe it's every 11 years.
All right, so, Mr. Chairman, to the director, are we going to keep this money in this account for 11 years?
Through the chair, actually, this fund is two purposes. One is the 27th pay. The other is to accumulate assets to pay separation and compensated absences. So as people separate, and sometimes we have bigger payments. So when this fund was created, it's created for two purposes: 27th pay, as well as our accumulated compensated absence balance.
Well, Mr. Chairman, to Mr. Gentile, in the book, throughout the book, don't we have longevity built into each department
Through the
in
chair-
anticipation of that?
Yeah, through the chair of the council person, we do try to budget that there, but if we had we actually put this in, if you look at in our financial statements and you look at the totality of our, what we call compensated absences, so it's deferred vacation, vacation on the books, sick time, the balance of this it is our liability in our books. We wanted to be able to fund that liability in the event that the operating budgets at some point could not take those separation payments.
All right, so Mr. Chairman and Mr. Gentile, are we underestimating or overestimating longevity in the book?
Through the chair to the councilperson, the annual ones that you see here are what we anticipate happening this year. This here is a reserve for the entire amount that's on our books, no matter what year that we may pay those. Again, we had to do a calculation when we set this up. So it was all the accumulated time that's in the financial statements on the books, plus the 27 pay equaled to 90 million. Now we used the 17 million to fund the 27 pay last year, and we won't have another one of those for 11 years. The rest of the balance of that is our liability on our books for total compensated absences. Again, we do try to budget out of the operating budget every year, but we do have this reserve out there to potentially pay that if the operating funds at some point no longer can pay the separation. Not actually longevity, but just the separation that you see in here.
So, the chairman to Mr. Gentile, how much of the 17 million is longevity and how much is broken out for the 27th pay?
Through the chair of the councilperson, 17 million is what approximately a 27th pay cost. So that you'll see in the actual last year, we actually transferred 17 million into the general fund. The balance, which is 73 million?
Yes.
73 million was our accumulated balance. 73 million was the accumulated balance on our financial statements the year we calculated this, when we created this.
So, Mr. Chair, so is there 17 million in there now? Mr. Chairman to Mr. Gentile?
To the chair of the councilperson, there's 73 million currently in there.
Am I on page 309?
Yes.
Yeah, you'll see, to the chair of the councilperson, you'll see in 2022, we funded it
Right.
90 million.
Okay.
Approved by
All right,
council.
okay, I see, okay.
Okay.
All right, I see where it is. So that money, Mr. Chairman, just sits there because as you remember, during last year's budget hearings, all the salaries were inflated from the year before, and we were told because it was for the 27th pay, right? And now we still have this 73 million sitting in this payroll reserve fund for separation. I mean, how much money is on the books, Mr. Chairman and Mr. Gentile?
Through the chairperson, through the chairperson to the council, 73 million in 2022. If you look at the financial statements, we have a huge balance of accumulated vacation, whether it's safety or other employees that are carrying these balances. 1/3 of sick time is calculated into that. So in 2022, when we did this calculation, it was $73 million liability on the city's books for earned time by employees that will be due based on their current wage rate that year.
And then, Mr. Chairman, to Mr. Gentile, one last question. Is this general fund dollars that replenish this money?
To the chair of the council person, I think it was revenue recovery money.
Yeah, it was revenue
So
recovery. Okay.
it's revenue recovery to the general fund of the payroll reserve.
Right.
All right, thank you.
All right. And there's a couple of outstanding bills that I want to talk about, like, with CD and a couple of other things that I do want to discuss with the director, because we got some shortfalls with some commitments that were made on development projects that might put some of these projects in jeopardy.
Okay.
And I want to make sure we talk, because I wouldn't mind dipping into that in order to cover some of those. Okay? Thank you. We have Councilwoman Jenny Spencer, Councilwoman Stephanie House-Jones.
Thanks. I was going to yield to Councilman Harsh because he and I have the same question, Mr. Chair.
Okay. Well, then I got House-Jones, McCormick, and Harsh.
Yeah, through the chair to the finance team. So for this payroll reserve fund, prior to 2022, how was the city of Cleveland preparing for separations?
Through the chair, it was kind of pay as you go through the current budgets. But as the workforce gets older and older, our average workforce, and we have more and more separations, while we had the funds available, we decided to put this reserve together for the 27th pay as well as the
So-
accumulated balance on our books.
So through the chair to the finance team, do you actually have the summary over the years of separations, longevity, that type of thing? Because prior to 2022, how long has the city been having a budget of separations of employees?
Through the chair to the councilperson, probably as long as we've done budgets.
Right. Okay. All right. So if you all can share specifically
Look at what we had, the 67
the, I guess that would be the, I don't know if it's,
plus 70.
is it the, who are the people who actually do? Is it the actuarians? Do we have actuarians that do our, oh, shoot. I really do. But that's all I have. I got to take this. I'm sorry.
Okay.
That's it.
All right.
Thank you.
And just to let you know, we'll have that follow-up conversation, and I know that the councilwoman is very active in that with me as well, okay? All right. Councilman Kerry McCormick.
Thank you, Mr. Chair. So the chair to the director or to the team, on the Councilman House-Jones' question, we've got the 73 million left over after the 27 pay. Are we still budgeting an annual amount in each department for separation?
To the chair, to the councilman, yes, we are currently doing that. Again, this is looking at long-term, if those expenses become, too high and not being handled by operations, we would then either transfer this money out at that point and/or start charging it.
Okay,
to
thank
this
you. And
fund.
Mr. Gentile, how long have you been with the City of Cleveland Finance Department? I know you had a break, I think, in the middle, but,
I've been back since 2002.
okay.
Yeah.
Have we ever historically, Chair, to Mr. Gentile, not been able to pay our separation?
Through the chair, no, we definitely have to pay the separation. Sometimes we may have to in leaner years, we may have had to cut something else knowing people were separating,
Okay.
but no, we were able to.
So it
pay all
just seems like
separations.
73 million in this account is a lot. I understand the idea of having some reserves, but 73 million is a very high number. And I am all about, I was the one that called out Dennis Kucinich when he said drain CPP's reserves. I mean, that's just, financial complete illiteracy. So over the years, I've advocated for the rainy day fund. I've advocated, for the sound financial management, but there's a line between sound financial management and having so much money, these dollars in the bank and having incredible need, right? You got to balance that. So the 73 million just seems like a very high number for this type of reserve. Chair to the director, do you care to respond to that?
Yeah, through the chair to the councilman. So just a point on that.
Yep.
I understand, you see 73 million there, but that also factors into things like ratings upgrades that we've gotten. So if the rating agencies look and we're, going out for a bond deal and they see that there's a huge liability on our balance sheet, but we have a reserve set aside, that factors into, and a rainy day fund, that factors into what kind of rating we can get. in
Yeah.
those parts. So it's more
So again,
complicated.
it's still,
than
to chair to the director, it's still about, even with that, it's still a balancing act, right? I understand the ratings and cost to borrow and all of that, but it's still a balancing act, right? How much do we keep on the books versus what the need is of today? And again, I am not one of those people that says drain the accounts because we have need. That's very poor financial management. However, again, just understanding what that sweet spot is and what that number is, and 73 million on the bank, is a lot of money in there, especially understanding the fact that if it weren't for the American Rescue Plan Act, these dollars wouldn't be there, right? These were revenue recovery from the American Rescue Plan Act, so we'd have no money in that bank. Well, not no, I'm sure we'd have something in there, but it wouldn't be 73 million. So I wanted to highlight that for this body. Again, given the fact that we are continuing to, on an annual basis, operationalize and operationally budget for separation, this is like, if all heck goes loose and somehow we're not able to cover our separation, this would come in. But that is a lot of theoretical theory in the future. Again, having to balance future risk with today's needs. I think that's just a policy conversation the city council has to have. Thank you, Chair.
And what I would really like to do, and this may take some research on our side, I don't want to get too over our heads, but really sit down and talk with you on what are the risks, how much can we maybe look at for that. I mentioned about some of these gaps that we have in about 8 or so projects that really didn't get the anticipated funding that they thought they were going to get. There's a couple of asks we're going to probably have around staffing positions. And if we can use a corner of that where we won't cause our rating to be jeopardized, I don't know if you know what that balance or what that sweet spot might be, but that's something that we'd like to discuss because if we're looking at 61 carryover and 73 payroll reserve, that's 134 that we're sitting on in cash reserves. And anybody in City Hall would tell you I'm probably the most frugal person in City Hall, especially when it comes to money. I'm the most frugal politician. But at the end of the day, we're going to have some needs. And the bottom line that we need to be thinking about is service. So just think about that because we may bring that up to say, why don't we use some of that money to fill some of those needs that we're looking at without risking our position, our financial position. Okay? So just keep that in mind when we do reconciliation, okay? All right, I have Councilman Chris Harsh.
Thank you, Mr. Chair. I think we've almost figured all this out, but round numbers scare me. So through the chair to Mr. Gentile, did when we transferred the $17 million, did we just round up and then transfer the rest of the general fund to cover the 27th pay?
Through the chair of the council, we just rounded up to 17 million, transfer to the general fund. That's not an exact 27th pay cost.
Yeah.
We just rounded up and transferred a round number.
Okay, and then so to make sure I understand this correctly, so if like the city of Cleveland were to come to a financial end and like everybody who works for the city was like told that your job is over, we would owe them $73 million in separation. Is that what this reserve is for? That's what we currently owe to our current employees if we all quit at once?
Through the chair of the councilperson, in 2022, we did this calculation. I'll do the calculation again. It's probably went up because salaries went up, so it's probably not fully funded now.
Yeah.
But I will do it, take another look at a calculation just to see what that number is. But it's a huge number on our financial statements.
But that's what this number is. Like, if everybody were to quit at once and want their separation pay, it would be this $73 million.
To the chair of the council, yes, it is the total liability on the books that's been earned by employees to date.
Through the chair, through each individual portion of our budget where we also allocate funds for separation pay, how much do we allocate in aggregate for all those departments separately from this 73 million reserve? Are we putting another 73 million into our budget? Is it 5 million? What's the?
Through the chair, that's what we put in the actual budget is what's anticipated just in that year.
Sure.
Not in total.
Is it
73 million is the total liability for all employees.
Yeah, I get
on our
it.
books.
Through the chair, do we expect a percentage of eligible draws to happen per year? So in our myriad departments, do we have 10% of 73 million is our expected for, we have an attrition rate that we can anticipate, right? We expect a certain percentage of city employees to quit every year, right? Is that how we determine the separation pay that's put into each individual department through the chair?
Through the chair to the councilman, the separation pay that you will see in departments is put in by the actual department. I mean, you can't really ask someone, are you going to retire? But they estimate this person may be able to, and this is what we would owe them if they did in this year. So it's not a percentage of this. It's what they believe that could happen in that year.
Through the chair, is each department then allocating 100% of what that person would get?
Through the chair, that's correct. They go to their payroll person, they add up their time, and that's the number that they put in.
They say, we think these 5 people might retire this year. How much would we owe them if they did? Let's go ahead and put that into our separation budget for the year, and that's how they calculate their department.
Through the chair, that's correct.
What would be really interesting, Mr. Chair, if somebody wants to pull out the calculator and add up all the separation pay that we are allocating to each department and find out what that number is, because that is going to be some percentage of 73 million, which we know is the whole city. We've got figured out that the whole city equals 73 million. I would really like to know how much we're allocating per department in sum total. Like, are we already allocating half of this? Are we allocating 15 or 25% of this? Like, because that might really help us understand how much cushion we're giving ourselves with the 73 million. Because the 73 million is clearly last resort money. And I understand that it's good for bond ratings because you want to go to the bond market and show that you've got all your outstanding debts in the future covered. But we're also covering them through our general fund as well. So they're double covered. Some percentage is double covered. Does that make any sense to my colleagues? Am I talking English? Is everybody with me? It'd be cool to figure out because we're double covering some of our separation. And knowing what percentage we're double covering would be kind of cool.
Mrs. Gentile?
Yeah, through the chair, yes, the one year could be double covered. Again, we have to go back and recalculate what that liability is now.
Yeah.
We weren't going to add more funds to this over time, so I never recalculated what's on the books as of 2024. So we can go back to 2024, see what our new number is. My guess is it's going to be higher than 73 million because people's wages went up, et cetera. Their time may have went up. But yes, the 1 year, assuming 73 million would still be the total liability, we have 1 year budgeted of the 73 million in the current budget.
Right, we have what we expect might be realistic for this year of the 73 million. And I'm curious what percentage of the 73 million that is. And I don't know whose job it is to go through and add all that up, but it's a department by department math problem, and somebody could probably pull it on a spreadsheet, right? So we can, at the table, oh my gosh, this is incredible. Okay, awesome, thank you. And I look forward to that number. I'm very curious, thank you.
Thank you, Councilwoman House Jones.
Never mind, I think we kind of,
Okay.
yes.
All right, thank you. We'll move on from we move on from payroll reserve fund to internal service funds. and Sinking Fund Commission. I believe those are combined, right, Ms. Saban?
Page 387, Sinking Fund General Operations. Justin M. Bibb, President. Paul C. Barrett, Secretary. Blaine A. Griffin, Member. Elizabeth C. Ruby, Assistant Secretary. Page 388, Salaries and Wages. 2024 unaudited, $211,233. 2025 budgeted, $264,157. Total expenditures, 2024 unaudited, $948,696. 2025 budgeted, $1,042,560. And page 389, number of employees December 2024, 2. Budgeted 2025, 2. Mr. Chairman.
Thank you. Director?
Through the chair of the committee, no comments except for, this is 2 employees and the budgeting's essentially flat.
All right. Any questions regarding the sinking fund? All right, I'm glad that you said what you said earlier, that you're getting somebody for Ms. Ruby to mentor, because she definitely is a person who brings a lot of value to the city, and I'm glad that she is able to pass the torch at some point in time, because she's done a great job over the years, so thank you. All right, Ms. Okay. Okay. Seeing no other questions for the sinking fund, we'll move to revenue bond debt service.
Mr. Chairman, I believe
Did I
this...
skip one?
No.
Oh, I'm good?
I think this is also with debt service revenues and expenditures.
Okay.
So page 379,
379?
debt service revenues, total receipts, 2024 unaudited, $91,072,158. 2025 budgeted, $90,679,789. And page 381, debt service expenditures. Total expenditures, 2024 unaudited, $91,072,159. 2025 budgeted, $90,679,789. Mr. Chairman.
Thank you. Director?
Through the chair of the committee, no comments. We're open for questions.
Anybody have any questions for the debt service expenditures and revenue bond debt service? Seeing any questions, let's move on to debt service unvoted tax supported obligations. Wish my good friend Mr. Jones was here to hear that.
Page 382, unvoted tax supported obligations. Total balance as of December 31st, 2024, $430,035,000, and total due $47,858,575. Mr. Chairman.
And just for clarity, Director, we don't need a whole tutorial, but just tell us basic what that means. That basically means that we owe, right now, the total debt that we owe for the city for these unvoted tax-supported obligations is $47 million, right?
To the chair, that's correct.
382. So for the listening audience, your bill that you have and your debt that you owe is $47 million in these projects. 2025. This is heavy vehicles and all of these. None of these are, to the director, none of these are pertaining to the ARPA funds or any of those expenditures that we made. Is that a whole different line item?
Yeah, to the chair, that's correct. It does not include that.
Okay. All right. Any questions regarding the debt service unvoted tax supported obligations? Seeing no questions, we'll move on to the rainy day reserve fund.
Page 299, rainy day reserve fund, ending balance 2024 unaudited, $67,599,335. 2025 budgeted, $67,599,335. Mr. Chairman.
Okay. All right, I got you, Councilman. Just want to make sure I understand. This 67, that is the money that we put into, we use ARPA dollars in order, or that's different? Did we put some amount of ARPA dollars into this as well? I think we did both.
To the chair, I think initially we put a little bit of ARPA, like at the very beginning, yes.
Okay. I remember, I just trying to remember if we did, but just want to get clarification if that was part of it.
Probably around 20 million?
About 20? Could you give us clarification about what, you got in it, the amount? You see the amount?
Yes.
What's the amount?
The chair, to the councilman, in 2022 on here, you'll see 20 million.
That's what I thought. Okay. So we used 20 million of those funds that we got. That's before, well, that was before it was called ARPA. It was something else. That was that money.
Or the CARES.
The CARES Act. So that was 20 million out of the CARES Act dollars that we put into the rainy day. Right. Okay. That's what I thought. So that wasn't ARPA funds. Just for clarification, there was a batch of money we got first, which was CARES Act dollars, and then the ARPA funds. So we put 20 million of CARES Act into this rainy day in order to get it up, right?
Right, to the chair, and at this rate here, we're at the state legal limit.
Right.
So,
No, the legal limit is 73, right?
Yeah, to the chair, we were at the legal limit, I think, last year.
Right.
This year, because it's 10%, I think, of operating revenues.
So because
we're about
of-
10 million short. I think it's 78, 77.
So because
78
our
is the
total
max.
budget is, the total budget is
Through, to the chair, it would be last year's
Last year's
revenues. Yeah,
revenues,
so
okay.
I think we were at 783. So
783.
I
So
believe
since we
so.
were at 783,
It'd be
10%
78.3.
of that is
Yes.
what we're allowed to go up to.
to the chair, that's correct.
So we're not at max anymore.
To the chair, that's correct.
Okay, does that harm or do anything to our bond rating or anything else?
To the chair, I think it's good that, I mean, it's definitely a positive that we have a rainy day fund. I don't think it's affecting anything now. I would just keep it in perspective. When we went over the payroll fund, one payroll is 17 million. So 67, it's nice to have that there. But it's only a few payrolls worth if we were to hit some sort of, emergency or we had shutdowns again. So, we try to balance that, as Councilman McCormick pointed out. It's a balancing act, but 67, it's important. I don't know that it's to the point, like having it's definitely a positive, but I don't know that it's affecting our bond ratings at this point.
Okay, and the goal is to have 6 months of payroll, am I correct? Or 4 months of payroll? What is the industry standard? I used to remember it used to be a certain amount that you're supposed to have in order to have payroll. Is it 4 weeks, 4 months or something?
Yeah, so to the chair, the policy may vary. I know where I came from. It was like 6 months of operating funds,
Right.
which is a lot more than the
Yeah,
67
that would be
million.
102 million.
Yeah, so where I came from, we didn't have these limitations, so we had a rainy day fund that was, a couple $100 million or so.
Wow. Jacksonville seems like a pretty cool city. All right. Okay. Questions, Councilman Kerry McCormick and Councilman Mike Palencia.
Thank you, Chair. Just quickly on this, does this fund earn interest?
The chair, the councilperson, the interest that gets applied to the general fund instead of this fund.
Okay, so that's in a different part of the book where the interest earned out of this sits. Okay, I just want to make sure that this is earning interest.
Yes.
Okay, I don't know if for some reason the state code prohibited it. Who knows? I'm glad to hear that. All right, and then so then we're under the okay. Okay, I was going to ask about the limit. You've answered that. Right. Thank you much.
All right, Councilman Mike Palencia.
Thank you, Chairman, to the Director Gentile. On page 299, so the restricted income tax, the receipts are 63 million, and the expenditures are estimated to be 67 million. So the 3.6 million, what do we use? We use general fund to cover that?
Chair, the councilperson, we're using the beginning balance. If you look a couple numbers below that, there's 4 million that we ended the year with.
Oh, okay, I see
So that plugged the gap there.
Okay, so then that's how we wind up at the 415 balance?
Through the chair to the councilman, that's correct.
Okay, so then on street construction, touch on that again.
Through the chair to the councilperson, for the budget for 25, we budgeted 45.9. The expenditures are 46.2. And then we had a beginning balance of 462,000 that covers the $302,000 deficit for the year, and we end the year with 160,000 and some change.
Okay. On the back page, on 309, 300, under the Cleveland Stadium, the $25,861,970, that does not include the capital repair, correct?
To the chair to the councilman, no, this is primarily the collected sin tax that we've gotten for Huntington Stadium.
Right. And so that, approximately that dollar amount, that's what we're going to pay until 2028, correct?
To the chair of the councilperson, yes, the sin tax proceeds now can only be used for repairs to the stadium.
Yes. So the reduction of 1.2 million, is that just in the collection? I mean, explain that to me.
No, through the chair of the councilperson, if you look at the 2025 budget up
Yeah.
top, we have 1.2 million more in expenses. So we're spending 1.2 million out of the beginning balance. That's why you see a decrease, a change of 1.2 for the ending balance from 24 to 25.
Okay. Okay. Okay, because I think it's always important when we talk about all this stuff, especially the Brown Stadium, that there be transparency and that people understand of what this facility has cost us every year and for the last 30 years, and we've paid a substantial amount of money for the Cleveland Brown Stadium, and I'm hoping, as I said to the mayor on day of transmittal, I'm hoping with the attorneys that he has retained, because that's the prerogative of the administration, council did not hire, that we are going to do everything we can to be made whole as a result of what the stadium has cost us, the taxpayers of the city of Cleveland. I want to make sure that I want to continue to stress that we, the people, have to be made whole as it pertains to Cleveland Brown Stadium should they decide to relocate to Brook Park. Thank you, Mr. Chairman.
Thank you. Anyone else for the rainy day fund? All right, we'll move on from the rainy day fund, and these are non-departmental expenses, county auditor deductions.
Page 294, county auditor deductions. Total expenditures, 2024 unaudited, $1,576,395. 2025 budgeted, $1,650,000. Mr. Chairman.
Thank you. Director, could you describe what these are for just one more time for the listening audience?
State the page again.
294. 294.
Yep, there's a handout for that, isn't there? No.
No, it's in there. You got it? All right.
To the chair, the county collects property tax, the county collects some other items for us, special assessments, et cetera. And the board, they run the elections countywide. So they deduct this from what they pay us. So these are the fees that are charged by the county, for the collection and payment of property tax and other items that they collect for the city and send to the city, as well as you see the Board of Election fee, that's for elections that are ran within the city limits.
Right. So so these are budgets, right? And this is 500,000. So we anticipate 500,000 for the Board of Elections for the municipal elections, the mayor and council elections?
Yeah, through the chair of the council person, yes, because of the citywide elections this year, it's usually a pretty high year. We had a pretty high year last year as well. Yeah, so we're anticipating 500,000 potentially in election fees from the county.
Do we have to pay for federal or state elections?
The chair of the council person, I don't believe so. I think it's just city elections.
And then just for the body, just so that you know, I know that there were a couple of referendums that people wanted to put on the ballot. So if somebody goes out and gets signatures to put a referendum on the ballot, the city has to pay for those, for that election, right?
To the chair, if it's a city issue, the city will be charged by the county for running that election.
So keep that in mind when, and I just use this, I know that people are going to watch and grimace when I say this, but when people wanted to put PB on the ballot and those kind of things, we would have had to not only consider that we would have had to foot that bill for that cost for the 14 million, we also would have had to foot the bill for the cost for the actual election.
Yep, that's correct, Chair.
So the reason I want to say that is in PB, I'm sorry, Director, this was about 2 years ago. A group had a citizen-led initiative where they did participatory budgeting. And when they did it, they wanted to have 14% of the budget that the public could caucus and determine how those dollars could be spent. And I don't think a lot of people know that we would have also had to pay for those elections as well. So just keep that in mind whenever that happens. That's something to keep in mind, okay? All right, any other questions regarding the county auditor's deductions? Mr.
Yeah,
Palencia,
thank
Councilman
you.
Palencia.
Mr. Chairman, to the finance director and to Mr. Gentile, do all municipalities have to pay for their elections?
The chair, the councilperson, yes, I believe it's on all. It's deducted right from the county. So when they collect for you or when they have elections, they deduct this amount. So they don't bill you. They just take it off the revenue that they collect for you. That's correct.
So they just skim it off the top, okay? That's the way we call it in the neighborhood. They take, it's called the Vic out there. They just take the Vic, all right, okay, right off the top, okay.
Anybody else on county auditor deductions?
They're going to get paid.
Seeing no other questions on county auditor deductions, we'll move to transfer to other funds.
Page 295, transfers to other funds. Total expenditures, 2024 unaudited, $81,245,879. 2025 budgeted, $54,402,525. Mr. Chairman.
All right, Director.
Through the chair of the committee, no comments are open for questions.
Just a couple of things. Subsidies to the cemetery. Why do we have to continue? And it looks like they keep creeping up. Why is that happening? Is that because of the construction that they have at the new cemetery over on the west side? Or not the new cemetery, but they're trying to expand. I forget the name of it, and they needed a morgue or a house or something out there?
Through the chair, or to the chair, the cemetery operations, they did add 3 additional people to their head count this year, and they also added some seasonals. Due to the split, before they kind of actually shared a lot of workers from vacant lots and such, and now that they split, they don't have that additional help. So that is why you see the additional subsidy, because it is for their increased salaries and wages.
So that's a little bit concerning because eventually one-time money does not work. So are we going to have to increase fees at the cemeteries or other things in order to cover those costs, in order to cover those employees? Because we can't just continue to subsidize every year and think that that's going to resolve it.
To the chair of the council, to the chair, I believe they're trying to expand that to get more ground sales, more intimate, to raise their charges for services to try to cover some of these additional expenses.
Okay. Well, Councilman Bishop is not here right now, but that's something that we need to bird dog very close because we want to make sure we understand how that's being developed because that seems to me like it's kind of creeping up and we got to make sure that we kind of put that genie back in the bottle at some point in time, okay? Any, Councilman Polensek?
Yes, I just want to get, thank you, Mr. I just want
Okay.
some clarification here. So of the transfer to the stadium fund, the 20 million that's here, there's additional money on that, on top of that. Where does that come from?
Through the chair to the councilman, the 20 million that you're speaking of is actually our subsidy to the streets. The 10 million right above that is our
Okay,
transfer to
I've got
stadium.
my arrow going the wrong way, okay. So 2 million, there's another 2 million out of that goes to the stadium, correct?
Through the chair, that's correct. That is in transfer to other sub-funds
Okay.
in that $7 million figure.
Okay. So then I want to get the senior home repair program, is that the transfer to capital?
Through the chair to the councilman, that's correct.
Okay, so that 2.5, that's that program,
Correct.
the senior home repair program.
And for the record, Councilman, that's our program, right?
Right.
Right,
That's some-
age-friendly, our age-friendly program that we
Right.
created.
The age-friendly program that we created to help seniors.
Right.
Okay, I'm just trying to understand. And then on the, it's already been touched on the golf course, the convention center, West Side Market. Okay, thank you, Mr. Chairman.
Okay, Councilman Kerry McCormick.
Thank you, Chair. Just quickly, can you provide a list of the other classes that exist?
Through the chair to the councilman, that is the $3 million that goes to the UDAG repayment fund for economic development, the $2 million for the capital repairs at the stadium. We do have to pay portions of income tax for Emerald Park, Brook Park, for the IX Center. And then there's also a $750,000 that we pay per year that goes to Sherwin-Williams.
Okay. And then the other question I've got is the street construction, 20 million. Is that for residential side streets and mains? What does that number include?
Through the chair, that is a direct subsidy to support their operations in the streets division.
But is that paving streets or is that operations?
Through the chair, that it's a mix of both. So part of this does support the employees that are paving the streets. And then part of it's just for their general operations, snow plowing, pothole filling, and other things. So this is a combination of both. But part of this is for the employees' wages and benefits that actually work in the street program.
So when we look at it, our repaving budget includes this money.
A portion to the chair.
You know what portion, Chair, to the controller?
I'll look in the
Okay.
streets budget and come up with that.
Yeah, and I just wanted to highlight when we talk about, we're having the conversation around CDBG and NDA funding, and the conversation is there's never any money to swap. I mean, here's $20 million and potentially eligible street dollars off the bat. So I just wanted to, and these are general fund dollars, these $20 million, right? So that's 20 million of general fund for potentially NDA eligible dollars.
To the chair, to the
CDBG
council
eligible.
person, we have it under the capital items and streets. The total's around 6.6 million in total. Now, part of that is geo bonds. I think about 2.7 is geo bonds, and about 3.8 million is attributable, I think, to the resurfacing program.
And that 6.6 lives in that 20 million?
Through the chair of the council person, about 3.8 lives in the 20 million, and there's about 2.7 that's geo bonds.
Thank you. And so if the 3.8, what is the remainder, 16.2?
Yeah.
Yeah, it's just to fund the rest of their employees, snowplow, people.
So the rest of those dollars are strictly
Operational.
payroll, operational? Okay.
Supplies. They're funded statutorily by gas tax and different taxes. That's nowhere near enough to run the streets, so the additional amount comes from the general fund. Again, 3 million is for the resurfacing program, the employees and benefits. The rest is just for all the other stuff that they do, guardrails, I mean, the litany of things that they're in
Got it.
charge
And then
of.
do we have any other general fund subsidies for street repaving outside of that 3 million? Remember historically, there's a 5 million number?
To the chair of the council person, no, we don't have any of that.
Was that 5 million historically to our streets program that we transferred?
Through the chair to the councilman, we do at times in the supplemental give streets.
In order to not use bonding authority?
Correct.
Right, did we do that last year, Chair, to the team?
Through the chair, I don't believe so. I think it was in 2023.
Okay, all right, thank you, Chair.
So I need to follow up on that line of question with a little bit more clarity. Because I thought we had about 12 million to do street repaving. Would it be helpful, because I don't want to try to go through the exercise here at the table, could you tell us how you come up with that 12 million and where it comes from? Because we anticipate, a significant conversation, and I'd already talked to the director his first week in office to warn him that we're going to probably try to see how we can try to get up to 20. However, I do want to understand how we got to 12 and where we can potentially put more into street repaving.
Yeah, to the chair, we can get you the calculation. One important thing to remember is a part of it comes out of whatever we're short on the 12 comes out of this year's GEO bond. So every year, we'll let Bonnie T1 know, hey, we're short like 2 million to make the 12, but we have the 10 to start moving. So this year, I think we're probably off a couple of million, but we can definitely give you the sources and where they're at, whether it's capital or in the operating, that equals the 12.
Director, here's the thing I would like to do, and I appreciate that. If you can give us how you got to the 12, and if you can give us any other potential ideas for how we can maybe put a little bit more in there.
Sure.
Even if I can't get all the way to 20, I want to see how we can get a little bit more in there in order for several reasons. But if we can have that conversation on where we can look under the cushions for that money, okay?
Okay, sure.
All right. Okay. For transfer other funds, anybody else? Any other conversation for transfer funds? Seeing no other, we'll move on to other administrative.
Page 296, other administrative. Total expenditures, 2024 unaudited, 36,822,173. 2025 budgeted, 23,954,500. Mr. Chairman.
All right, thank you. And just a very brief description on what the others is. This is pretty much where we pay for our dues for National League of Cities, NOACA, mayors and managers, Global Cleveland. This is where we pay for all of those kind of niche groups that we work with. Is that correct?
To the chair, that's correct.
Okay.
If I could, through the chair, just want to point out, we do have green sheets for this section, so just want to make sure you're looking at the
Where they
right
at?
number.
Oh, I know, I forgot you put it under here.
So,
They passed them out. Okay, I got you. Go ahead, I'm listening to you.
page 296, this is a number, there's a number down on property tax for 2025. This is a number we get from the county, so that number changed.
296? And
Down in the
that
bottom
is-
right-hand corner.
Bottom right hand? Okay.
And then on page 297, the transfers in was adjusted to 3.7 million.
So you have 59 million, but you made the adjustment to 55. Why was that?
Through the chair, or to the chair, sorry, to the council president. So when we get the number from the county, that actually includes the 3.5 million of homestead rollback, but that number actually comes from the state. So the way that we budget that 3.5 is in other shared revenue. So we took the 3.5 out of the property taxes.
Okay. Thank you. Okay, Councilman Polensik.
On page, let me go back here. On page 296, under contractual services, the 3 million for property rental, is that the Justice Center?
Through the chair, that's correct.
Okay, so then when we go down a little further, I want to make sure I make that note here. So then we go down, we're paying the 3 million for rent, and then the 2.5, we're paying that on top of the rent for maintenance.
Through the chair, that's correct.
Man, we are getting the upper and lower radiator hose from the
What did he say?
county, let me tell
What do
you.
you say about what you said?
We're paying 3 million for rent and 2.5 million for maintenance. We could have built a brand, for what they have been charging us, we could have built a new jail in the city of Cleveland, okay? I mean, this is ridiculous, what they're whacking us, ridiculous. So then, under bank service fees, why such an increase there?
Through the chair to the councilman, I believe the bank services is budgeted here, but then they're charged back to the divisions at the end of the year.
But why is there such a big jump?
Yeah.
Through the chair of the council person, it'll probably end close to where it was. Again, we budgeted for all of our bank fees out of non-departmental. As we figure out the usage of these banks by department and division, we then charge it back, sort of like we do the audit fees.
Okay. So then, going down to revenue, just briefly hit in the revenue column for the viewing public. Explain that briefly.
Through the chair to the councilman, the charges for services, that is the franchise fee. The grant revenue, that's primarily just the COPS grant revenue that we receive. The miscellaneous revenue, the neighborhood equity fund. The miscellaneous, I'm sorry, that's the revenue that we get back from the enterprise funds and the grants for administrative. That's the cost allocation
Okay. And then,
cost.
and then other shared revenue, what is that?
Through the chair, that is the, what is the other shared revenue? I know what it is. The homestead rollback, yeah, the 3.5 million. What else is in that number? Let me come back to you on that one. Obviously, property taxes,
Yes.
That's what we get from the county. The state and local government fund, we also get that from the county. The transfer in, that's from the joint economic development, if we need to transfer that in. The 17 million from last year was obviously to cover the payroll reserve, or the 27th pay, and then that's our general fund income tax.
Okay. So you're expecting the income tax to go up approximately, let me see, about 14 million, correct?
Through the chair, that's correct.
Okay. Let me just go back to here. Let me get my bearing straight. So again, I raised it, interest income, nothing. Why is that nothing? Zip.
Through the chair, the cost is usually shared amongst divisions, but the interest is posted into the Treasury division.
Okay. Well, you know, to the director and to Mr. Gentek, we raised this issue repeatedly about interest income. Again, take that money out of the St. Clair Savings and Loan and put it into a bank where you get some interest, okay? Okay? I mean, get that one worked out, will you? I mean, come on, really?
He's hilarious, man.
I mean, really? I mean, I don't get it, but then there's a lot I don't get in this budget, but anyway, that's besides the point. Okay, thank you, Mr. Chairman.
All right. Any other questions around other administration? All right, we're moving to restricted income tax. Restricted income tax, and bring us home.
Page 299, restricted income tax fund. Ending balance 2024 unaudited, 4,015,277. 2025 budgeted, 415,277. And page 301, restricted income tax. Total expenditures 2024 unaudited, 61,674,463. 2025 budgeted, 67,367,870. Mr. Chairman.
Thank you. Any questions regarding the restricted income tax? Councilman McCormick.
Thank you. Chair to the Director, can you just explain the decrease from, I'm sorry, hold on. Yeah, the projected decrease in the 25 budget. What's the 3.6 million? I'm sorry, I'm on page 299, restricted income tax fund.
To the chair, to the councilman, that's if you look at the 2025 budget, there's a shortfall of 3.6 million.
Yes.
And we're making that, we ended the 2024 with a little over 4 million of carryover. So we're basically spending that carryover. That's why you see the negative 3.6 from year to year.
I see. Okay, and what are we spending that on?
Through the chair to the council member, restricted has to be used for debt service or capital items only.
Okay. Do we know, is that going to debt service or capital?
It has to go to debt service or capital.
Have we made the decision where we're spending it yet, or?
Yeah, through the chair of the council person, first priority is to find out what we need for debt service. So
Okay.
Betsy Ruby lets us know what the amount is for debt.
Okay.
The balance we use for capital
So
projects.
we're just noting the
Page
3.6
301.
expenditure, but have not made the final decision as to where that's going. Is that correct?
Yeah, to the chair of the council person, that's correct. And
Okay.
What page is this then? 301. If you go to 301, we have the breakout.
Go to 301 if you could. And explain that breakout if you could.
Yeah, and if you look at transfer, the top number there that's budgeted at a little over 43 million, that is for debt service. And then the remainder, which is the 22 million, a little bit over 22 million is the capital amount.
Okay.
Got it.
So that's what roughly.
And there's a small amount below that's principal and interest that's for a debt.
Okay.
That's on there as well.
And that's taken out of the. Okay. Okay. All right. Thank you. I can see it now.
And just to follow up on that, so I know you're going to give us the whole breakout, but the capital outlay, you don't pull any of money from that to do roads, do you? Do you use that strictly for buildings, parks, bridges, those kind of things?
To the chair, generally speaking, this would not be used for roadways. This would be, a lot of this is IT expenses. A lot of it's IT and then recurring expenses that we have and things, and some assets that have a shorter useful life that we really can't bond. We would use restricted income tax. So if you have something that has a shorter useful life, we would use restricted income tax versus a long life, because it's hard to bond those
Okay.
on the capital side.
So, my colleague, Councilman Polensik's question. The beautiful decorations in City Hall, most of that was done through this fund?
Through the chair to the council person, some of that could have been done by this or could have been done by facilities. We can get you the actual breakout between restricted and public facilities. It would have to be those two sources.
So if we can get that follow-up, Ms. Saban? Ms. Odie Martins, thank you. All right, any other questions regarding RIT? Councilwoman Stephanie House Jones.
Yes, through the chair to the finance director, will council members be getting that, I think it was like 75,150? Yes, from this RIT. Don't make that face.
No, I was about to say, don't give up the trade secrets yet. No, we can't use this money RIT for those expenditures, but we do have another item that that money for the age friendly is in, and
Yeah,
then
no,
the
that's-
NEF. That's a discussion that we're going to have with some other dollars, but we can't use RIT for that.
No, that's not what it was.
Okay.
But I'm trying to understand where it will come from, because the biggest issue when they were saying, I did a whole thing of research regarding, there was an allocation of some sort. It was either $75,000 to $150,000, but they were saying it can only go, it was what could be utilized for Project Clean-ish. Okay, people looking at me like they don't know what I'm talking about. Anyway, my point is, what uses could come from RIT. That's all.
Could you let us know what uses?
And it
come
was
from
5 years, and I know the answer to it based on the thing is like anything that had a useful life of 5 years or more. And this was going back and forth because, again, wanted to use allocation for trees, and they was like, well, trees don't qualify. That's not what the state said, but someone interpret that from the city as being trees, but understanding that we don't touch trees. Trees last a very long time. And so really trying to get some clarity on if maintenance of trees would qualify as a RIT expense.
Yeah, through the chair of the councilperson, my understanding that we cannot maintain trees with RIT funds. But, we'll double check again with law to make sure that that's.
And that's, again,
Correct.
the thing is 5 years, but if we don't touch trees, that's what I'm trying to figure out. If you have a tree that is causing permanent damage and we don't have the allocation of really trying to identify if it's 5 years, what's the definition of a tree that lasts way over possibly even 100 years? How does that not qualify? And that's more of a law question than a finance question. But again, that's what the state standard says. And so a part of tree maintenance should be able to, because again, we don't ever, based on the inventory of trees that the city of Cleveland has, we are not touching them in 5 years or less.
Right.
Okay. Thank you. Any other questions on RIT? All right. First of all, Director, you survived your first budget hearing. Congratulations. Mr. Gentile and Mrs. Gallagher did great blocking for you. Instructions, so everybody can know, I am not going to be the sole arbiter of all of the things coming. I want everybody to work with their chairs, okay? Myself, Councilman McCormick, and Councilwoman Santana will be meeting on Thursday. I would strongly recommend that the chairs have conversations with the members of their committees in order to go through recommendations. Once again, we are not going to be able to come to the table with $25 million more worth of requests and people just saying add on dollars here, add on dollars there. So I'm asking everybody to use your best wisdom and knowledge on this. But at the end of the day, I want to work through the chairs. The chairs will then work closely with me, Councilman McCormick, and Councilwoman Santana to make some final determinations on what we're going to sit down with the finance director and do. And then we will sit down with the finance director and the mayor, hopefully by Friday, figure out what things we agree upon and what things we don't agree upon. And then prayerfully we can put some legislation together and begin to kick off the budget being read 3 times. That has to be read 3 times before April the 1st. And introduction does count as one. And keep in mind, we do have 2 major events that we have to deal with. One is the National League of Cities, which will be, I think, on March the 10th. That we won't be here. And then also, even though we're probably going to reschedule a special meeting on March the 18th, because St. Patrick's Day is on Monday, March the 17th, and it's going to be a madhouse downtown. So we prefer to just do a special meeting, probably the afternoon of March the 18th.
Yeah.
The afternoon of March the 18th, so that we don't interfere with St. Patrick's Day and have to fight through all the crowds and deal with all of the activity on March the 17th. But once again, I encourage you to talk with your chairs. I already have the policy team assigned to your committee has a list of all of the questions that we have for the administration. I want you to make sure that you keep your policy team in the conversation with you. And then once they submit something to me, Councilman McCormick and Councilwoman Santana, we will deliberate and determine what adjustments we need to make and what we can reconcile, and then we'll move forward with that. Any questions for me,
Yes.
Councilman Michael Polensky?
The requests that we have made during last week and this week, when can we expect to get those?
I mean, to the chair of the council person, probably depends on the volume
Okay.
of what they were. Simple ones can be answered pretty quickly, but some of those were pretty detailed, so it's hard
And
to give
I would ask that staff, Mr. Chairman, would break them down by department and division, so we can, like, let's say, the ones we made on safety, so I can just see the ones on safety, or let's say Public Works, or whatever the case may be, break them down by department and division. And then during reconciliation last year, we had agreed to certain things, and then those things were not followed up on. So I want to find out what assurances that we're going to have that when we come to terms, that the things that we agreed to are going to be adhered to by the administration.
So, go ahead, you had a? So I think what the issue was, and Councilman Polinsik, and
Yeah.
I'll just bring up two examples.
Yeah.
We put, I think, the Councilman KZ put aside money for a food, for example, for the commanders to be able to do something so that we wouldn't have to pay for it a lot. I believe that was something that we
Yes.
didn't see. And I think you guys said that it was buried in another line item. And then you had the auxiliary police.
Yeah, we had
$100,000 for the auxiliary
And then
police.
the chief said she could never find
She
it.
said she couldn't find it because it was what you guys wind up saying, it was buried in the line item. But what we strongly suggest is to actually break that out or show us how that is actually being done. Because to
Yeah.
Councilman Polinsik's point, we agreed on it in reconciliation. It was put in the budget, but it was never acted upon. And then the people who we told that we had this allocation for them to
Right.
do uniforms and other
Yes.
things basically felt like we were not telling them the truth. So that's the reason why we need to make sure we understand
Yes.
where it is at, where it's going to be embedded at, where we're making the amendment, so that we clearly can see where we are making those adjustments at.
Thank you, Mr.
Okay?
Chairman. Thank you.
Any other questions regarding reconciliation? Councilman McCormick.
No, I don't know if you just want to say that the ordinance is recommended for.
Oh, yeah. Just one more time, everybody. Please don't send me $25 or $30 million worth of requests. The first 2 years, the reason that we had to go a different route is because everybody sent in requests and they were all additive. And the next thing I knew, it would have blew up the budget by like $30 million. And we can't just add just $30 million arbitrarily unless we know where we're going to get it from. So just keep that in mind as we're having conversations. And then also, I know that there's a lot of other pet projects that people have. There's a couple of things that I'm going to try to ask for to try to make sure that all of the members benefit in the wards, to be able to
Yes.
have some things that they can do in their ward that I think could be helpful. But that'll be the macro level that me, Kerry, and me, Councilman McCormick, and Councilwoman Santana talk about. Any other questions?
Can I just make a general comment, Mr. Chairman?
Yes.
To the director and to the, and again, I appreciate the director's engagement and what he provided to us pre-budget hearing. But let me just say, I believe you've underestimated your revenue by at least 3%. That's I've been going through this. I believe you've underestimated your budget, your income tax by at least 3%. And I believe you've overestimated on your expenses. Because when going down through each of these departments, I see a cushion, whether it be in contractual services or whatever. So again, I'm just stating that for the record. I understand, I've been here long enough to understand every administration wants a cushion in each department or division. That's the nature of the beast. But I will tell you again, I believe you've underestimated your revenue. Okay, I'll state that for the record. Thank you.
Once again, before I make this recommendation, talk with your chairs by tomorrow. Those who are not here, hopefully your colleagues, you could talk to them. I want to thank everybody who stayed all the way through. I was just telling Councilman McCormick, this is one of the better finance hearings because I think people really spent time to really try to dig deep in the budget and also has some other great ideas as far as what we can look at it. And I want to thank you to your team as well. Talk to your chairs by tomorrow, Thursday morning. I'm going to be in decision-making mode by Thursday afternoon. Friday, I'm going to be sitting down negotiating with the mayor and the finance director and hopefully try to have some decisions made in order to be able to move forward. The first 2 years, we were here on Saturday, half of the day trying to negotiate. I plan on trying to get this done Friday at the latest Saturday morning. So any questions you have for me, feel free to call me. But thank you. This ordinance number 156-2025 is recommended to the next level. Thank you.